Welcome to FinTech 15, where we get straight into the insights of the leaders who are at the forefront of financial innovation. I am Tallal Gondal, and I'm your host. And joining me today is Mr. Olivier Rikken, who is a partner and founder of Emerging Horizons, where he helps companies of all sizes to be prepared for upcoming technologies such as blockchain, AI, artificial intelligence, and also big data in a very hands-on manner. He's also an expert on decentralized autonomous organization and governance and an international keynote speaker. Oliver, thank you for being here.
Yeah, you're very welcome and great to be on your show. Thanks.
Awesome. In the next 15 minutes, we are going to extract Oliver's valuable insights and also his hard-earned lessons from his personal journey into leadership. So let's jump in. Oliver, thank you for being here. It's a real pleasure. So your expertise are in cutting-edge technologies such as AI, blockchain, etc. I want to know in terms of what are some of the, particularly, emerging technologies that we should be paying attention to. Which of these technologies is going to have the biggest impact, in your opinion?
Well, all are going to have an impact in their own way. Let me start out with that. Which ones are having the biggest impact at the moment? I would say that obviously AI is having a lot of impact in all different kind of industries at the moment. Although it's been an involvement that's been going on for years already. What a lot of people don't know is that the whole research towards AI already started in the 1950s. So we're talking 70 years ago, and now we see implementations really fast tracking, which is great and creates a lot of opportunities. Another one, obviously, is blockchain with all different applications. So not only cryptocurrencies, but the whole broader crypto asset implementation, but also implementation like self-sovereign identities, etc. Really bringing sovereignty back to the users instead of being dependent on third parties in the middle, which is great as well. And a somewhat longer term technological development that's going on that will not impact us today, but will have a huge impact on any industry, I would say, is quantum computing, which is underestimated very much at the moment, not only from a opportunity perspective, but also from a governance risk and compliance perspective. We do have to start preparing for that already, although it sounds far, far away before it's viable. So these are three of the main technology developments that I see going on. Obviously, there are many more, but we only have 15 minutes. So let me bring it down to these three.
I love that. So talking of obviously governance and compliance and risk, obviously, we mainly focus on the opportunity that these technologies bring. But what are some of the big issues regarding governance, risk, and compliance that we need to be paying attention to as well, while these technologies are actually, emerging and evolving at this time?
Yeah, like you rightfully mentioned, we tend to focus a lot on the opportunity, which is great. It enhances entrepreneurship and really let us rethink how we do business. But what all these technologies nowadays obviously have in common, that we have an ever higher degree of digitization of our processes. And with regards to that, I would really emphasize on the fact that we really have to be careful that we are still in control of what's happening for us. Without noticing, we are completely giving away our control to the digital world. And it happened really fast with the internet coming up already. If you just go back in time 25 years, rewind it and see what you could do online 25 years ago. At that time, I was still in college. If I had to do a payment, I had to go to a bank and fill in some paper, and then the transfer was done. Nowadays, everything is online. If you take internet away, we are basically standing still immediately as a society. And this is ever increasing with every new technology coming in. And take into effect that every new technology actually always has one thing in common, that we make things more efficient. We take out traditional third parties, etc., which is great from an efficiency standpoint, but from a governance perspective, you take out a little bit of control and actually shift this control to a technology in itself. Again, it's great from an efficiency point of view, but you really have to think it through from a governance, risk, and compliance perspective. How can we keep controlling what's happening around us? How can we make sure that we can intervene when possible or when needed? These are all questions that we have to ask ourselves. And obviously, related to that is also the ethical side of things. Do we want to automate everything out there? Yes or no? And is that the best way forward? And the answer can be yes. And sometimes we have to be a little bit more careful in some sort of way. So we have to find this fine balance between innovation and GRC, which is, I think, a very healthy balance.
Yeah, absolutely. So for companies that are eager to adopt these new technologies, what, in your opinion, are like the 2 to 3 key sort of actionable steps that they need to take now when they are looking at governance by design, rather than just trying to retrofit, with the compliance later on?
Yeah, well, one of the most important things that any company should do is really know how their processes work, what their processes are, and what their place is in the broader supply chain or value chain that they're in. If they know that what they're doing, how they communicate within these processes with the various parties around them, and what their place is and where their controls are, that is the best major step anybody can take, because based on that, you can say, all right, I want to have control here or there, and we can let go of this part, and this doesn't make sense that the human does it, so let's digitize it or automate it. In these elements, we still want to have a certain kind of control. So be very cautious or conscious about where do I stand in my value chain and what do my processes look like, because it all trickles down to that.
Yeah. So one of the things that you mentioned is Amara's law, which suggests that we often like overestimate the short-term impact of new technologies, but at the same time, we're underestimating their long-term effects. So where do you see this playing out mostly in fintech right now? Whether that's AI or crypto, and what are the long-term impacts that we are currently underestimating, that the financial leaders should be preparing for?
Yeah, actually, I can best illustrate this by example. I've been in the blockchain space for 10, 12 years now. So I was quite early at the game. Back in 2013, 2014, I started experimenting with it, started building solutions where possible, because Ethereum, which was needed to build most of the solution, only came into existence 10 years ago.
Yeah.
But at that point in time, we had these brilliant ideas and we were going to change the world. And it was a very cool vibe, don't get me wrong. And I was still very much on the opportunity side at that point in time, obviously. We had this fear of missing out. If we don't do it right now, somebody else is going to do it, and we're going to change the whole financial world immediately. There were nice ideas. There were great ideas. We're really thinking differently, but to change the world, it takes steps. Let me put it like that. And it takes baby steps. And that's where then at a certain point in time, especially the first drops we saw back in 2017, and we had a crypto winter back in 2021 or 22. So then we saw the downsides, the downfalls a little bit here and there, and everybody said, hey, you see, it's just all a hype. While at the beginning, we thought we would change the world within a year or two. So everybody overestimates the short-term effect of a new technology because everybody is extremely enthusiastic. But in the meanwhile, while certain technologies are being declared dead, and blockchain has been declared dead a couple of times, AI has been declared dead a couple of times already in the past as well. In the meanwhile, people are starting developing and building real life solutions and implementing it under the radar more and more, instead of having all these marketing shout outs of what we're gonna do. people are actually start doing it. And this is what we actually see happening more and more. And it gets sneaky integrated more and more into society. And just the example of internet that I just mentioned, nobody can pinpoint in their life when internet took over their lives. But we know for sure that internet has taken over our lives. But we cannot pinpoint the moment. And back in 1999, everybody was like, it's going to change the world overnight. It didn't change the world overnight, but it did change the world on the longer term. And this is what we see happening with every implementation of a technology. So right now, for example, the fact that in the EU, we agree to a EU-wide regulation of MiCAR with regards to crypto asset says enough. It is the ticket into becoming mainstream. Whilst 5 to 10 years ago, everybody was ignoring it or saying, hey, it's dead and it's never going to fly right after the initial enthusiasm. So like Amara's law says, we tend to overestimate the short-term effect, but to underestimate the long-term effect. And we do see massive growth in tokenization projects. We do see massive growth in AI projects. While years ago, we thought it would change it overnight. And then it just took years and years and years because people start building viable stuff. And this is also where governance, risk, and compliance comes in when designing your solutions. Because in the beginning years, everybody is working on it as innovators, cowboys, and they don't tend to think too much about GRC, which is good for innovation, right? You want to have this creativity, and it's great. But if you want to have mass adoption, you want to have thought of GRC quite well through, because then it's ready for mass adoption, and that is the long-term effect that we see happening. So yeah, that's why I'm a fond believer of Amara's law in this case.
Brilliant. I love that. So let's make a shift to your personal journey now, Oliver. Now, obviously, you're an international keynote speaker. You specialize in decentralized organization and governance. You actually have your own company that you founded. You're very, very successful. So my question is, in terms of what was the critical moment in your career, or what were some of the key lessons that you learned along your career that then allowed you to actually have focus on so many different things and find success in all these different areas?
Well, I cannot pinpoint it to one moment, but there are a few moments in my life where I thought, hey, let's start to do things differently than mainstream. And it started right after my graduation from university back in the day. I just obtained my master's at Delft University of Technology back in 2005. And all my friends had this one goal, and that was to obtain a traineeship at one of the big companies like Shell and AkzoNobel, and or everybody wanted to become a consultant at one of the big consultancy firms, etc. And at that point in time, I thought I had to go the same path as well. But just by sheer coincidence, and life in the end is just a chain of coincidences, I would say. I ran into this job opening at a very small company. But this company was doing things completely different in the transport and logistics world. Really focusing on doing it as lean and mean as possible. And they wanted to hire a young graduate that was very good in crunching data. And that was when they hired me. And that was unheard of in the transport and logistic world, because everybody was focusing on cheaper material, etc., but not on crunching numbers to have better prediction models of the weather in relation to the demand of transport, these kind of things. I thought it was a really, really nice opportunity to start working in something that I really loved, because I graduated on simulation models, so this was where my head was at. And the biggest lesson for me was, hey, I didn't go for a traineeship at a big company, but I really went for this small company that was super focused on getting things done. And as it was a small company, I really got the opportunity to rise extremely fast in the company in itself. So within a year's time, or just over a year's time, I was part of the management team of the company. And
Wow.
I was helping running a company that had an annual turnover of over 50 million euros as a 26-year-old or 27-year-old at that point in time, or maybe a little bit older. But that was just a eye-opener for me, that you don't have to go the standard route that everybody's going in order to make your own career. And yes, afterwards I went to consultancy, etc., and went over and forth. And that is a second lesson. I went over and forth from industry to consultancy, back to industry, back to consultancy. And to really know the both worlds firsthand. So if you're a consultant and you're seconded at a client, it is not the same thing as being part of the company in itself. So being in both worlds and learn valuable lessons is always good for your development, especially if you want to pursue a advisory role in the long term. Let me put it like that. Because then you really had your boots on the ground, really saw the effect of the advices that you give and all the implementation hurdles you go in. So that is a second lesson. And a third lesson is, and that was, say, 5 to 10 years ago, when I decided to start entrepreneuring and just doing it for myself. Believe in yourself. If you say, hey, I've got some unique knowledge, I've got a great idea, it is very safe to develop this idea under the wings of a larger company. But hey, once in a while, take a guess and see if you can do it for yourself. Entrepreneuring is fun. It has its ups and downs, but it's in the end, if you work hard and keep focused and keep on learning, you will get there.
Amazing. Thank you for sharing that, Oliver. And a different kind of question, perhaps, and you don't have to give me an exact number. You can give me a range if you're comfortable with that. But as an entrepreneur, what's the most amount of money you've made in a year?
Yeah, it depends on how you measure it. Is it turnover of the company or personally? So that it's really hard to do. So yes, you can build companies with turnovers over 1 million. At the bottom, it's not what you keep for yourself, obviously, because you reinvest it all the time. So it's a hard one to answer, but I can lead a comfortable life. Let me put it like that.
Love that. Now, what was the most impactful book that you've ever read?
I obviously there are multiple books, but the most impactful book still until today that I read was actually my professor asked me to read it for my master thesis back in the day, and that is the book The Goal by Elijah Goldratt. And it's all about how you optimize processes within a company. But it is a scientific-like book written like a Roman, like a normal book.
Right.
And that is actually great because it really gives you understanding what the thinking and the philosophy behind it really is. And once you grasp that philosophy of thinking in how to optimize processes all the time, then you will immediately start implementing that in day-to-day life. And that was really a life changer for me. And I would recommend it to everyone. Read The Goal. It is a book of a few hundred pages, but you really read it in one weekend. It's very easy reading material, and it will change the way you look at how business is being done and how you can make it much more efficient.
Love that. So, Oliver, final thoughts. What advice would you give to people, people like me, who are looking to transition into fintech from another sector and are aspiring to be future fintech leaders?
Two things. One, if you really want to step into fintech, really understand the technology and the solutions that you are trying to develop or trying to push into the industry. There are too many people out there who heard about a solution and read 2 articles and call themselves an expert, which is annoying. Let me put it like that. So really read into the possibilities and the impossibilities of technologies, and the possibilities and the impossibilities of implementing the technology in the industry that you're going into, because it is, especially the financial industry, obviously a highly regulated industry, and sometimes you can question it why the regulation is at the high, but in a lot of times it is for a very good reason that we have a lot of regulation there. So that brings me to the second part. First part, again, truly understand the technology, the opportunities, but also the things that technology cannot do. Secondly, look at it from an opportunity perspective. Obviously, always look at for opportunities, how it can help and how it can improve. But also look at what are the risks, the potential ethical and compliance problems you run into if you implement a technology like that. Because if you do it like that and really understand both worlds and on the both aspects that I just mentioned, then and only then you're gonna tell an honest story towards your clients. And it's all about being honest towards your clients, because that's the way entrepreneurship works in the long term.
Yeah, absolutely. Well, Oliver, thank you so much for sharing your insights and your thoughts. To our audience, thank you for watching. Make sure you follow on LinkedIn and make sure you subscribe on YouTube. Stay tuned for the next episode, and I'll see you then. Thank you.